Welcome to Real Estate in Review. Are we witnessing a major shift in the housing market? From plummeting mortgage rates to high-risk investments, today's summary reveals vital insights that could impact your financial decisions.
We'll dive into expert predictions on the real estate market shift, affordable housing states, rising economic pressures, and more.
Stay tuned for key takeaways from different experts at the end of the video.
Make sure to smash that like button and subscribe to stay ahead in these turbulent times.
Sachs Realty reveals why it's too late for sellers and how the market is now favoring buyers. Reventure Consulting highlights the top 10 states where you can still buy an affordable home under $200,000. Ken McElroy shares billionaire secrets about raising financially savvy kids. Real Estate Mindset dives into plummeting mortgage rates and what it means for consumers. Melody Wright shocks us with a 13% surge in mortgage delinquencies month over month. BiggerPockets unveils two markets showing serious cash flow opportunities even in 2024. Jason Walter provides an update on foreclosure and mortgage delinquency rates in July 2024. Ryan Scribner gives the ultimate guide to investing on Robinhood for beginners in 2024. Welcome to Sachs Realty's Tuesday Night Podcast. Tonight, we're diving into the seismic shift in the real estate market from a seller's wonderland to a buyer's paradise.
Absolutely. And joining Todd Sachs are Mark Ritter, a seasoned Maryland market guru, and Phil Cimetti, our Florida real estate maven. This conversation is going to be as loaded as a fully packed moving truck, so buckle up.
Let's get straight into the meat and potatoes. What's the main gist of tonight's talk?
The big idea here is that the real estate market is undergoing a noticeable shift from being in favor of sellers to becoming a buyer's market. Rising inventory, significant price reductions, and economic strains are the prime movers causing this transition.
All right, so tell us more about this market shift. What are we seeing on the ground?
Mark mentions a market delusion. Sellers and agents are slow to recognize the changing dynamics. Meanwhile, in Florida, Phil points to the rising number of new listings and price drops as key indicators that the power is moving towards buyers.
Interesting. Now let's talk dollars and cents. What sort of economic pressures are playing into this?
Debt is the demon here. We're looking at over $1 trillion in credit card debt and sky-high mortgage rates. The burden is becoming too heavy for many, causing them to pause on buying or making adjustments on current properties.
Debt is definitely a huge factor. And how about investors? What's the latest trend there?
Investors are jumping ship. They're looking to offload properties like they're hot potatoes. We're seeing a lot of homes coming back on the market due to deals falling through. Smart money is either holding off for better deals or choosing safer bets like bonds.
For those eager beavers looking to buy, are there any ace strategies you recommend?
Todd suggests looking for assumable mortgages. These can offer lower interest rates, allowing more affordable buying options. And Phil's tip, get in front of those price decreases.
Any crystal ball insights for us tonight?
The team predicts continuous price corrections. Todd emphasizes that while changes won't happen overnight, sellers will increasingly feel the squeeze to reduce prices. It's a slow-moving but unstoppable trend.
All right, let's wrap it up. What's the bottom line here?
The bottom line is, play it smart and stay cautious. Buyers should do their homework and seize new opportunities, while sellers need to come to terms with the market cooling and adjust accordingly. It's all about strategic planning.
Welcome to Reventure Consulting on YouTube. Today's hot topic is the top 10 most affordable states to buy a house on Zillow. Stick around as we break down where you can snag a house for under $200,000 and keep your monthly payments below $1,500. All insights courtesy of Nick Jurley, your go-to expert for real estate scoops.
That's right. If you're dreaming of homeownership but think it's out of reach, you'll want to hear about these states. Nick Gurley has pinpointed some incredible bargains for aspiring homeowners.
So, what's Nick's main takeaway from this video?
The core thesis is that there are still plenty of states where home prices are very affordable. Nick spotlights these states and highlights why they're becoming attractive options for potential homebuyers.
All right, let's dig into the details. What's Alabama got to offer?
Alabama is pretty sweet. The typical home value here is around $226,000, and monthly payments generally run under $1,500, including mortgage, taxes, and insurance. Oh, and property taxes, an astonishingly low $800 per year.
Wow, sounds like a steal. How about Arkansas?
Arkansas is varied. In affordable areas, you can keep your monthly payment around $1,300, plus some zip codes sport higher incomes and good growth potential.
Good to know. What's happening in Indiana?
Indiana is all about affordability, with the typical home value at $276,000. It's drawing people thanks to good school districts and lucrative housing deals.
Moving on to Louisiana, what's their story?
Louisiana has some affordability pluses, but loses out because of population decline. Some homes even saw price drops up to 17% in recent years, making it a buyer's market.
And Kansas, what's the scoop there?
Kansas is another affordable gem. With typical home values around $223,000, even Topeka pays you up to $15,000 to move there.
Nice. What's enticing about Oklahoma?
Oklahoma certainly has its charm. Typical monthly payments are a reasonable $1,330, plus with a thriving population growth, the state is booming.
Let's hear about Kentucky.
Kentucky's typical home value is just over $200,000. Louisville and Bowling Green are particularly hot markets offering great value and growth.
Onwards to Mississippi.
Mississippi boasts super low values. Houses go for about $178,000. Be cautious, though. The median income is low, posing some economic risks.
How's Iowa looking?
Iowa's a solid choice. With typical home values around $214,000 and higher income levels, the affordability is great.
Let's wrap it up with West Virginia.
West Virginia is shockingly an affordable hotspot. Home values are amongst the lowest, and surprisingly, the state is growing. Bonus, they'll even pay you to move there.
All right, prediction time. What does Nick foresee for these affordable states?
Nick predicts that states with increasing inbound migration and affordable home prices will continue to thrive. These are smart picks for those looking to buy.
Summing it all up, what are Nick's final thoughts?
Nick wraps up by emphasizing the fantastic value and appeal of these affordable states. It might not be easy to move, but recognizing these value pockets can be a game changer for potential home buyers and investors.
Welcome back to Ken McElroy's YouTube channel. Today we have an exciting episode where Ken dives into the secrets behind how billionaires raise their kids to be successful. It's packed with practical advice and engaging stories, so let's break it down.
Absolutely, Ken takes us through his top 3 lessons for teaching kids about money, drawing from his own experiences and successes. Let's get into it.
So what's the core idea Ken wants to share with us today?
The main thesis is all about imparting 3 crucial lessons on money to children: leading by example, teaching the value of bartering, and encouraging entrepreneurship. Simple but effective.
Got it. Let's unpack those key points, starting with leading by example. What did Ken share on this?
Ken brought his kids into his business from a young age. They helped out with tasks like trashing out and painting units. He also used Rich Dad's cash flow games to teach financial concepts through play. The goal? Real-life application of financial metrics like assets, liabilities, and cash flow.
Sounds like hands-on learning. What about teaching kids to barter?
Exactly. Ken emphasized understanding value beyond money. He took his kids to a barter convention and introduced them to the viral red paperclip video. His children practiced trading items without using money, enhancing their negotiation skills and recognizing value.
Very creative. Now let's talk about entrepreneurship. How did Ken encourage this?
Ken got his kids into the entrepreneurial spirit by starting small businesses, like selling found golf balls. They learned market demand, branding, and profit margins by diving into these ventures. They even reinvested half their earnings into new businesses, practicing sustainable growth.
So what's Ken's prediction for kids who grow up with these lessons?
Ken predicts that kids who learn these principles early will inherently grasp financial and entrepreneurial concepts. These foundations will position them for future success, potentially becoming the next generation of billionaires.
Wrap it up for us. What are the big takeaways?
Ken underscores the importance of practical, hands-on experiences to shape a child's financial literacy and entrepreneurial mindset. His call to action? Get your kids involved, in real financial decisions, encourage playful learning, and foster a spirit of entrepreneurship. The future's looking bright.
Welcome back to the Real Estate Mindset on YouTube. Today, we're unpacking a full bag of economic issues, sinking mortgage rates, and consumer struggles with our guest, Eric Nelson. Fasten your seatbelts, it's going to be a wild ride.
Absolutely. From consumer liquidity crises to flying through the latest in housing market trends, Eric's expertise is here to guide us through it all. Plus, he's got some wild personal stories too. Ever heard of getting bit by a shark while fishing for charity?
So what's the main focus of today's discussion, distilled into one core idea?
Eric delves into the economic turmoil we're experiencing, with a particular focus on plummeting mortgage rates and the immense pressure on consumers. It's a financial jungle out there, and he's here to help us navigate it all.
Let's break down some of those key points. First up, economic turmoil. What's happening there?
Eric sheds light on the current economic landscape, focusing on consumer liquidity issues and the troubles brewing in regional banks. It's a bit like playing financial whack-a-mole.
And how about consumer data? What's the latest?
Consumer spending might look strong, but it's propped up by increasing credit card debt. Delinquency rates are climbing, and personal savings are hitting rock bottom. The resilient consumer narrative is a bit of a facade.
All right, and what's the scoop on the housing market?
Housing inventory is through the roof, nearly back to pre-pandemic levels. Even with price cuts, many homes are still overvalued. Eric cautions that the market is still quite unaffordable for average buyers.
Lastly, let's touch on mortgage updates. Anything new there?
Eric dives deep into refinancing and amortization schedules, highlighting how extra payments on mortgages can save you thousands. It's all about understanding those hidden costs.
Crystal ball time. What predictions did Eric share about where we're headed?
Firstly, he foresees an economic downturn driven by rising credit card debt, low savings, and escalating consumer prices. Secondly, he predicts a market correction in housing, which, while painful, is essential for bringing prices down to earth.
Wrapping it all up, what are the big takeaways from Eric's insights?
Eric emphasizes cautious financial planning. Save money, avoid unnecessary debt, and make informed real estate decisions. His mantra is simple: stay ahead of the turmoil by being aware, disciplined, and prepared.
Welcome to the channel, everyone. Today, we've got a juicy topic from Melody Wright's recent M3 market update. Hold on to your calculators. We're talking surging mortgage delinquencies.
Buckle up, folks. We're diving into a 13% month-over-month spike in mortgage delinquencies. Things are looking bumpy in the real estate world.
All right, let's cut to the chase. What's the core issue Melody Wright is highlighting here?
Melody reveals a whopping 13% increase in mortgage delinquencies from just last month, the biggest jump since the early COVID days. And get this, the biggest chunk of that is 30-plus day delinquencies, which seriously impact credit scores.
Yikes. All right, break it down for me. What are the key points Melody discussed?
First off, that 13% increase is huge. It's like a financial earthquake. This peak hasn't been seen since April 2020, during the COVID-19 pandemic. Plus, 30-plus day delinquencies, the red alert for your credit score, are particularly on the rise.
That sounds serious. Any hints on what's causing this shakeup?
Inflation, skyrocketing property taxes, and insane insurance rates are pushing people over the edge. Melody uses data from Black Knight, which tracks both bank and non-bank mortgage services, to back this up.
So, are there any safeguards or programs for struggling homeowners?
Oh, definitely. There are loss mitigation programs, like forbearance plans and loan modifications to help homeowners. But even with these safety nets, FHA loans are seeing unsettling delinquency spikes.
Let's whip out that crystal ball. What predictions did Melody make?
She forecasts a continued rise in delinquencies. However, foreclosures won't flood the market immediately due to regulatory delays and government interventions.
And what about the broader market impact?
Consumer financial exhaustion is setting in, and this will start pressuring the housing market. We'll likely see effects on home prices and market stability as these delinquencies pile up.
Wrapping it up, what are Melody's final thoughts?
Melody stresses that this spike in mortgage delinquencies is a serious economic warning. While immediate foreclosures aren't on the horizon, The upward trend in delinquencies indicates deep financial stress among consumers. The housing market could face significant challenges ahead.
Welcome to the BiggerPockets Real Estate Podcast Summary. Today's hot topic, two real estate markets that are solid gold for cash flow, even going into 2024. Hosting today, we have David Green and Rob Abasolo, ready to unlock the secrets of these booming markets.
Absolutely. David and Rob break down the intricacies of picking profitable real estate markets. They're seasoned pros with a ton of insightful advice for anyone looking to maximize their investment returns. Let's dive in.
So what's the main idea driving today's episode? Why should we care about these particular markets?
The core thesis revolves around identifying top real estate markets for reliable cash flow in 2024. David and Rob share their strategies and experiences to help investors make informed, strategic decisions.
All right, let's get into the key points. First off, what did David have to say about choosing the right market?
David emphasized that choosing a market isn't a one-size-fits-all situation. Each market serves different investment strategies, and there is no magic button market. It all boils down to thorough research and understanding your personal investment goals.
Interesting. How did Henry Washington's example of Joplin, Missouri, fit into this?
Henry described Joplin as a cash flow haven, especially being just an hour from northwest Arkansas. With slow but steady appreciation, manufacturing and healthcare jobs provide strong rent-to-property price ratios. His recent purchase? A duplex for $73,000, renting each side for $500 to $600 straight out of the gate.
Solid numbers. And what advice did Rob have on evaluating markets?
Rob stressed the importance of targeted research. Start by defining what you want: cash flow, appreciation, or a mix. Then, build a short list of potential markets. Look at key metrics: population growth, job growth, property costs, and rents. And don't just rely on data. Visit and talk to local experts.
Now it's prediction time. What trends do David and Rob foresee?
Henry believes Joplin's rental demand will increase as Northwest Arkansas's infrastructure pushes people outward. And Rob highlights the stability of 55-plus retiree communities like Williamsburg, Virginia. Steady demand, less volatility.
So wrapping it up, what are the actionable takeaways?
David and Rob underscore the importance of robust research and strategic approaches. Understand your goals, dig deep into market metrics, connect with local professionals, and utilize tools like BiggerPockets Market Finder to inform your decisions. Knowledge is your best investment.
Welcome back, everyone, to another exciting episode on Jason Walters' YouTube channel. Today, we're diving into the latest update on foreclosure and mortgage delinquency rates in July 2024.
That's right. Jason's breaking down the numbers, trends, and what they mean for homeowners and the housing market. It's going to be a data-packed session.
All right, let's cut to the chase. What's the crux of Jason's update on foreclosures and mortgage delinquencies?
The core thesis is that while we've seen some ups and downs, foreclosures and delinquencies remain significantly lower than historical averages from 2014 to 2019. Even with rising consumer debts, the housing market appears relatively stable.
Let's break it down, starting with foreclosure activity. What are the key stats here?
In the first half of 2024, there were 177,000 properties with foreclosure filings, down 4.4% from last year, but up 7.8% from 2 years ago. Remarkably, this is also a 63% decrease from the 2014-2019 averages.
Nice. How about mortgage delinquencies?
Prime mortgage's delinquency rate is at 1.3%, down from 1.8% in 2018. Subprime mortgages show greater improvement, moving from 21.9% in 2018 to 15.3% today. The only blip is FHA loans, which have increased slightly to 10%.
And what about seriously delinquent mortgages?
Good news there, they've dropped by 36% compared to 2018, from 772,000 to 493,000.
What about foreclosure starts and completions? Any drastic changes?
Yes, foreclosure starts have gone down from 33,600 in May 2018 to 22,600 now. Foreclosure completions have plummeted to just 3,400 from 21,300 back in 2018.
All right, crystal ball time. What is Jason predicting about the future?
Jason suggests foreclosure activity won't rise dramatically unless there's a significant spike in unemployment. Currently, the unemployment rate is at 4.1%, higher than recent years, but still much lower than the Great Recession levels.
So the overall stability of the housing market seems assured.
Correct. Despite the rising consumer debt and slightly higher mortgage delinquencies, the housing market remains stable due to low overall rates and limited homes at risk of foreclosure.
Let's wrap it up. What are the main takeaways from this video?
Jason advises staying informed and cautious. While there are concerns like the rise in consumer debt, the data doesn't suggest an imminent housing market crash. Foreclosures and mortgage delinquencies remain low compared to historical norms.
Welcome back to the Ryan Scribner YouTube channel. Ready to conquer the stock market with nothing but your smartphone?
Absolutely. Today, Ryan Scribner is taking us on a deep dive into Robinhood investing. This ultimate 2024 tutorial covers everything you need to know, whether you're just starting or looking to master advanced features.
So what's the main focus of today's video?
Ryan's aim is to provide the most in-depth guide on how to use Robinhood for investing. From opening an account and making deposits to smart investment strategies and advanced features, he's got it all covered.
Let's kick things off with account setup. What are the key steps Ryan outlines?
First, visit Ryan's affiliate link for a free stock, then download the app. You'll need to provide your address and social security number for tax reporting. Ryan also walks you through linking your bank account using Plaid, which is both secure and seamless.
How about depositing funds? Anything cool he shows there?
Ryan demonstrates a $50 deposit and explains the instant deposit feature, up to $1,000 while your bank transfer is still pending. He also talks about using debit cards and Apple Pay for quick deposits.
Nice. So once the money's in, how do we start investing?
Ryan delves into investment basics like asset appreciation and dividends. He uses the example of buying the Vanguard S&P 500 ETF, VOO, to show how diversification works and explains the buy low, sell high strategy.
He must cover buying and selling stocks too, right?
You bet. He walks through buying and selling both fractional and whole shares. Whether it's a piece of Microsoft or a slice of the S&P 500, Ryan's got you covered.
Ryan loves to keep an eye on the future. Any predictions he shared?
With Robinhood offering up to a 3% match for IRA contributions, Ryan predicts many users will flock to these retirement accounts. It's a smart move for long-term investing.
All right, let's wrap this up. What are the big takeaways?
Ryan emphasizes Robinhood's utility for both beginners and advanced users. Key tips include maximizing returns through dividend reinvestment and leveraging the app's diverse tools for a comprehensive investment experience. So get on Robinhood and start investing today.
Today, we saw a wave of differing opinions and strategies. Sachs Realty's guests emphasized the shift to a buyer's market, urging caution and strategic moves.
Nick Gurley of Reventure Consulting pointed out incredibly affordable states.
Ken McElroy shared wisdom on teaching financial literacy from a young age.
Eric Nelson and Melody Wright highlighted economic pressures pushing up mortgage delinquencies.
BiggerPockets focused on lucrative cash flow markets, while Jason Walter provided a reassuring yet cautious outlook on foreclosure rates.
Despite varying predictions, all experts agreed on one thing: stay informed and be vigilant.
Check back for insights and strategies to navigate these turbulent times. Thanks for watching Real Estate in Review for July 18th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.